Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad HAKIM bin Muhammad HALIM. Okay, this chapter 22 is audit the capital acquisition and repayment cycle. Okay, next slide. Okay, that's how the objective we will present. Okay, next slide. Okay, now I will present on identify the accounts and the unique characteristic of the capital acquisition and repayment cycle. Okay, next slide. Okay, characteristic of the capital acquisition and repayment cycle. For the first, relatively few taxation affect the account balance, but each one is often highly material in amount. This means the account balance are not affected by many taxation, but each one can be very important in term of money. Okay, second, the exclusion of a single taxation could be material in itself. Okay, that means a single taxation could be important on its own. Okay, next slide. Okay, three, a legal relationship exists between the client identity and the holder of the stock, bond, or similar ownership document. This is legally there is a relationship between your client and the person who own the stock, bond, or other ownership document. Okay, four, a direct relationship exists between the interest and dividend accounts and debt equity. That means there is a direct link between the interest and dividend account and debt equity. Okay, next slide. Okay, this is the account list in the cycle. Okay, first, not payable. The amount of money or on a written promise to pay loan from bank in this account. Okay, contract payable. If we have a big project going on, don't just look at the paid report. Make a list of all the contractors on the project. Okay, mortgage payable. Okay, mortgage payable is a liability account whose balance is the unpaid principal balance of as of the balance sheet date. Okay, bond payable. A type of long-term debt. Bond are sold by business, hospital, and government. Okay, interest expense. Non-operational costs are shown on the income statement. If we borrow money through bond, loan, convertible debt, line of credit, or any other type of debt, we will have to pay interest on it. Okay, accrued interest. The amount of interest that has built up on a debt since the last time it was paid. Okay, appropriation of retained earning. Okay, appropriate retained earning are any inappropriate retained earning that are not meant to be used for dividend payment, and they are called the retained earning. Okay, treasury stock, treasury share, the amount of share that a company keep in their own bank account. Okay, dividend declare. When a company has paid out a dividend, but the payment has not been sent to the people who own share. Okay, next slide. Okay, cash in the bank. The total of all coins, money, and cash item has been put on deposit at a bank or other type of business. Capital stock common, and ordinary share is a type of equity instrument that is lower than all other type of equity. Capital stock prefer shares are company shares that have dividend that are paid to shareholder before ordinary share dividend are paid out. Okay, paid in capital is in excess of par. Okay, donated capital, a gift of asset to a company, usually by a state or local government to get a business to move there. Okay, return earning. If a company has not paid out dividend or other payment to its shareholder, that is profit the money it has made so far. Okay, dividend payable. That which a company board has decided to give to its shareholder in the form of dividend. Okay, proprietorship capital account. Person who run a business that has no legal difference between the person who owns and runs it. Okay, partnership. Partnership capital account. It is a record in the accounting record of partnership that shows how much money each person owns. Okay, next slide. Okay, methodology for designing test of balance for payroll liabilities. There's three phases. Okay, for the first phase, identify client business risk affecting not payable. Second, set tolerable misstatement and assess inherent risk for not payable. Assess control risk for not payable. Okay, next slide. Okay, for the second phase, design and perform tests of control and substitute tests of transaction for capital acquisition and repayment cycle. And the last is a third phase, design and perform analytical procedures for notes payable balance, design tests of detail on notes payable balance to certify balance related audit objective. That's all from me. I will give to the next presenter.
Okay, Assalamualaikum warahmatullahi wabarakatuh. My name is SYADDAD bin JUSOH. Alhamdulillah, thank you to my lecturer, Madam Mas Niza, for giving me chance today to present about my group topic, which is Chapter 22, Audit of the Capital Acquisition and Repayment Cycle. Okay, insyaAllah, before I'm going further to explain about my part, which is learning objective 2, design, perform, audit test of not payable and related account and transaction, let me explain first what the meaning of not payable, so that we can find out what not payable in this capital acquisition and repayment cycle. Okay, next slide. So, not payable. Not payable is a written agreement that between borrower and lender, where it is borrower obtain a specific amount of money from a lender, and then borrower promise to pay it back with certain interest over predetermined period. Then we can say that this not payable is a loan between two entities, which is borrower and lender. Or we can say that this not payable is liability in writing that promise to pay a specific amount of money at future date. So that's the meaning of not payable that we can simplify. And then for further explanation, the meaning of not payable is a legal obligation to a creditor which may unsecured and secure by asset. So when start legal obligation not payable is when borrower sign the agreement, and at the moment not payable become active and binding legal obligation. That's how started not payable binding legal obligation. Then the meaning of secure by asset means the borrower pledge some asset as collateral, such as machinery and equipment for the loan that lender can use as a payment if the borrower cannot pay back the loan. And if secure, if borrower not making problem during the time of repayment, then lender will extend time of repayment for borrower to pay their loan. And then for the meaning of unsecured by asset, means there is a loan that is not secure, covered by collateral by the asset of the issuer of the note. So it present more risk to lender. Due to that, this note interest rate are higher than secure note. In other words, it only involve small to moderate sum of money and has a higher interest rate. And then after that, the time of period of the note is issued between 1 month and 1 year, but longer term note do exist. And then note are issued for different purposes, such as buy house and buy asset. And then loan has a two type of loan, such as short-term loan and long-term loan. So for the short-term loan, it is required only when the loan becomes due. So when loan become due, so payment must be settled out. And for the long-term loan, it is over 90 days, which means 3 months. And this for long-term loan, it is usually called for monthly or quarterly interest payment. And then lastly, the principal and interest must be met in accordance with the term of the loan agreement, like we show as a picture in the slide. Okay, for the next slide. So this is the flow of transaction not payable and the related interest account. So for this flow, you can refer to page 680, figure 22.1, which show the account which are affected by not payable, such as not payable, cash in bank, interest payable, and interest expenses. So the interest expenses are recorded when it is become due and after being paid. And if it is already due and we are still not able to pay, and it will become the interest payable. And then when we want borrow money, we going to debit cash and credit not payable. And at a certain point, we want to making payment, so we going to credit cash and debit not payable. And next, obviously, we going to debit interest expenses and credit interest payable to accrue the interest. And we can see that if we pay the principal, they will deduct from cash. So not payable will be debit and then credit cash. And then after that, the liability of the beginning balance will be credit, so that any issuance of the note will be addition, but the payment will be a debit or a minus. And in the cash and bank, the issuance of note will be debit to the cash and bank, so that it is addition debit to cash and bank, but the payment for both principal and interest will be credit. And interest is be a debit to interest payable, and then the payment of interest payable that is involved will be credit if there is expenses. So that's why the balance payable in credit account, it will increase when there is interest and a debit for the interest expenses. And after that, the auditor usually will include test of principal interest payment as a part of audit of auditing the acquisition of payment cycle. And this is because the payment are recorded in the cash disbursement journal. However, in a lot of situations are happen, they are not capital transaction are included in the auditor sampling for test of control and substantive test of transaction. It is because of their relative infrequency. So the auditor are not prefer to do sampling for test of control and substantive test of transaction if there is relative on infrequency, because it is only a few transactions that occur in the company. So no need to do sampling, except for big company that have so many transactions occur in company. So for this big company, auditor prefer to do sampling. And therefore, it is common, normal to test this transaction under the capital acquisition and repayment cycle. Okay, the next slide. Okay, then for the objective of the audit of not payable, they have three objectives, which is for the first one is to determine whether internal control are adequate or not. And the second one is to determine whether the transactions are properly authorized and recorded. And the last one is to determine whether the related liability and expenses are properly stated. So they have three objectives of audit not payable. So then we going one by one for these three objectives. So for the objective number one is internal control are adequate, which means internal control are acceptable or not, which is internal control is its strength or deficiency. And if internal control are strength, so it can provide evidence, show the financial statement are accurate to help the company to avoid any misstatement in recording transaction of not payable and help to avoid any late payment made after deadline that stated in agreement. So that's the meaning of point number 1 of internal control are adequate. So we move to the second objective. The second objective is transactions are properly authorized and recorded, which means they must get authorized first from the higher management before they want to make a loan with third party. They need to get authorized first and higher management must authorize them first before they make a loan to make the transaction are properly authorized. And for to make the transaction are properly recorded, so the transaction must recorded according with 6 transaction related audit objective, which is occurrence, completeness, accuracy, posting summarization, timing, classification. So that's the meaning of second objective. The transaction are properly authorized and recorded. So we move to the third objective. The third objective is the related liability and expenses are properly stated, which means this liability are referred to interest payable and for the expenses are referred to interest expenses. And the related liability and expenses are properly stated. It is because if the amount is not balanced, it will affect the financial statement. So we will have to make sure that the not payable have been properly recorded as authorized and record liability and expenses at correct amount, according to 7 or 8 balance related audit objective, which is accuracy, existence, completeness, detail tie-in, classification, cut-off and right obligation. And this is where realizable value is not applicable to liability account. So the next slide. Okay, for the internal control, they have 4 internal control over not payable, which is proper authorization for the issue of new note, adequate control over the repayment of principal and interest, proper document and record, and the last one is periodic document and record. So we're going to the first one, first of internal control, which is proper authorization for the issue of new note. So for this, like I mentioned, proper authorized. So we need approval from board of director or higher level management like CEO, CFO, when we want to acquire new loan. And for the loan agreement, we need at least 2 signature of properly authorized official to make our loan is a proper authorized. And then loan agreement will specify loan amount, interest rate, repayment term, and the asset pledge. And then in the future, if we want to renew the note, we need to do the same procedure of authorization, meaning that there is no shortcut way to make our loan are properly authorized. So we need to go through the same authorization procedure if we want to renew the note. So that's the meaning first internal control, proper authorization for the issue of new note. Okay, for the second internal control, adequate control over the repayment of principal and interest. And for this one, the periodic payment of interest and principal should be subject to the control in the acquisition and payment cycle. And at the time note was issued, the accounting department should have received a copy of note, which are similar when they receive vendor invoice or receiving report. And then the account payable department should automatically issue check for the note or electronic fund transfer for the note when the note are become due. So as we can see, this is the same manner, same way like when it prepare the payment of the acquisition of goods and services. And then the copy of the note that accounting department receive should provide the supporting document for payment such as receipt, invoice, check and others that can be proof of payment to be evident as a reference for auditing. So that's for the second internal control. And then for the third one, the internal control of not payable should be done is the proper document and record. So for this one, we need authorized person to record subsidiary record and control over blank and paid note. And for the paid note should be cancelled and retained under the custody of an authorized official. and the accounting department will prepare the schedule of loan repayment, and from that we can know how many the outstanding loan. And for the last one of internal control that should be done over not payable is periodic document and record. So for this detailed note record should be reconciled with the general ledger and compare with the note holder record by an employee who is not responsible for maintaining the retail record, which means independent employee. And at the same time, an independent person should recompute the interest expenses or not to test the accuracy of the record keeping. Okay, so that's all for me. I will pass to the next presenter to further explanation about learning objective 2.
Thank you, ZHARIF. Hello, everyone. My name is SYAKIR, and today I'm going to talk about the test of control. We talk about subjective test, analytical procedure, and test of detailed balance for not payable. Okay, for the subjective test of transaction for not payable, test of not payable transaction involve the issue of note and the repayment of principal and interest. These audit tests are part of test control and subjective test of transaction for cash receipt and cash disbursement. Additional tests of control and subjective tests of transaction are often done as part of tests of detailed balance because of the maturity of individual transaction. Test of control for not payable and related interest should emphasize testing for internal control we just discussed, like ZHARIF just explained before, such as proper authorization for the issue of new notes, adequate control over the repayment of principal and interest, proper document and record, and lastly, a periodic independent verification. In addition, auditors should verify the accurate recording of receipt from the note proceed and payment of principal of interest in order to prevent misstatement and error of transaction in financial statement. Okay, next slide. Next slide. Okay. For the next segment is I will explain about analytical procedure for not payable. Analytical procedure involve comparison of different set of financial and operational information to see if historical relationship are continuing forward into the periodic under review. Analytical procedure are essential for the not payable because test of details for interest expenses and accurate interest can often be eliminated where result are favorable. Okay, for the first analytical procedure for not payable that we can do is recalculate approximate interest expenses on the basis of average interest rate and overall monthly not payable. When we do this, the possible misstatement that we can avoid is misstatement of interest expenses and accurate interest or omission of an outstanding not payable. Okay, next. Okay, for the next analytical procedure that we can do for the not payable is compare individual notes outstanding with those of the prior year. Okay, when we do this, the possible misstatement that we can avoid is omission or misstatement of not payable. Okay, lastly is analytical procedure that we can do for not payable is compare total balance is a not payable interest expenses and accurate interest with prior year balance. When we do this, the possible misstatement that we can avoid is misstatement of interest expenses and accurate interest of not payable. Okay, next slide. Okay, for the next statement, I will explain about major related audit objective in a not payable. Okay, the normal starting point of audit not payable is schedule of not payable and accurate interest which auditor obtain from client. There are many audit objectives in a not payable, but the two most important related objective in not payable are completeness which existing not payable are included in this schedule. We do this because completeness help auditor to verify that all transactions for the period being examined have been properly entered into the correct period. That's why all the existing not payable must be in the schedule. Okay, for the next audit objective is accuracy, which means that not payable in the schedule are accurately recorded. We do this because we want to make sure that amount in the schedule is accuracy without any error. Accuracy of not payable can be audited by do recalculation in order to make sure the amount in the schedule is accurate. Okay, for the next slide, I will give to the Andina for the next slide.
Okay, thank you. Bismillahirrahmanirrahim. My name is ANDINA binti SULAIMAN, and I will present about the third agenda in this chapter, which is identify the primary concern in the audit of owner's equity transaction. Okay. For the owner equity, which is have two publicly held corporation and closely held corporation. Basically, for the public held corporation, which is known as public listed company, and for the closely held corporation, which is known as Sedian Berhad. Public held corporation, there are many shareholders and there are frequent transactions. For the closely held corporation, the transaction for the owner equity is simpler because they have a few shareholders, and usually the shareholder is the owner of the business. Next is the objective. The objective is to make sure there is a good internal control over share capital and related dividend are adequate. Owner equity transaction are wait guys. Okay. Owner equity transaction are correctly recorded as defined by the 6 transaction related audit objective. And for the third one is owner's equity balance are properly recorded as defined by the 8 balance related audit objective and proper presented and disclosed as defined by the 4 presentation and disclosure related audit objective for owner equity accounts. Okay, for the owner's equity and dividend account, this is the journal entry and the flow of the journal entry. I will explain about the paid in capital in excess, or we known as share premium. For this share premium, it has been appealed since we used the Company Act 2016, but it is not fully appealed on 2016. The government give all the company about 2 years to fully appeal all the share premium. Okay. Next is internal control. The first one is proper authorization of transaction. Many of equity transaction must be approved by the board of director. The transaction need to be approved, such as issuing share capital, which is how much share you want to issue, the par value, and the date. And for the repurchase of capital share, or we known as share buyback of the ordinary share or preferred share. And the last one is the declaration of dividend. Okay, next is proper record keeping and segregation of duty. When a company maintains its own records of share transaction and outstanding share, the internal control must be adequate to ensure the actual owner are recognized in the record. The correct amount of dividend is paid to the shareholder and the potential for misappropriation of asset is minimized. The last one is independent registrar and shares transfer agent. Any company with listed share is required to engage an independent registrar as a control to prevent the improper issue of share certificates. Many companies employ a share transfer agent to maintain the shareholder records, including the documenting transfer of shares ownership. That's all for me. I will pass to the next presenter.
Okay, hi and Assalamualaikum to our beloved madam and everyone. My name is BINTI HUSSIN. I will present about learning objective 4. It is design and perform test of control, substantive step of transaction, and test of details of balance for capital stock and return earning. Next slide. Okay, audit of capital share and paid in capital. Okay, auditor have 4 main concerns. The first one is completeness transaction related objective. The second one, occurrence and accuracy transaction related objective. The third one, accuracy balance related objective. And the last one, all for presentation and disclosure objective. Next slide. Okay. The first main concern is completeness transaction related objective. This objective is easily satisfied when a registrar or transfer agent is used. The auditor can be confirmed with them whether any capital stock has occurred an existing transaction, and then determine if all of those transactions have been recorded. So uncover issuances and repurchases of capital stock. The auditor also review the minutes of the board of director meetings, especially near the balance sheet dates, and examine client held stock record books. Okay, next slide. Okay, occurrence and accuracy transaction related objective. Extensive auditing is required for transaction involving the issuance of capital stock, such as the issuance of new capital stock for cash, the merger with another company through an exchange of stock, donate share, and the purchase of treasury share. Auditor also can readily verify the accurate recording of capital stock transaction for cash by confirming the amount with the transfer agent and tracing the amount of the recorded capital stock transaction to the cash receipt. Okay, next slide. Okay, accuracy balance related objective. Auditor verify the ending balance in the capital stock account by first determining the number of share outstanding at the balance sheet date. After the auditor is satisfied that the number of share outstanding is correct, the recorded par value in the capital account can be verified by multiplying the number of share by the par value of the stock. A major consideration when auditing the accuracy of balance related objective for the capital stock is verifying whether the number of share used in the calculation of earning per share is accurate. Okay, next. Okay, all for presentation and disclosure objective. The most important sources of information for determining whether all for presentation and disclosure related objective for capital stock activity are satisfied. The corporate charter, the minutes of the board of director meetings, and the auditor analysis of capital stock transaction. Next is the auditor should determine that each class of stock has a proper description, including the number of shares issued and outstanding, and any special right of an individual class. The last one is auditor should also verify the proper presentation and disclosure of stock option, stock warrants, and compatible security by examining legal document or other evidence of the provision of this agreement. Okay, next slide. Okay. This is all about audit dividends, which is the emphasis in the audit of dividends is on dividend transaction rather than on the ending balance. And then the exception is when there are dividend payable. And then they have 6 transaction related audit objective for transaction are relevant for dividends. And typically dividend are audited on 100% basis. The most important objective, including those concerned, which is recorded dividend occurred, is occurrence. Existing dividend recorded is completeness. Dividend accurately recorded is accuracy. Next slide. Dividend are paid to shareholder that exists is occurrence. Dividend payable are recorded, completeness. Dividend payable are accurately recorded is accuracy. So an auditor can also verify the occurrence of recorded dividends by examining the minutes of the boards of director meetings for authorization of the amount of the dividend per share and dividend date. And the accuracy of the dividend declaration can be audited by recalculating the amount on the basis of the dividend per share times the number of share outstandings. And when a client keeps its own dividends record and pay the dividends itself, the auditor can verify the total amount of the dividend by recalculation and reference to the cash disbursed. And last one is test of dividends payable should be done in conjunction with declared dividends, and any unpaid dividend should be included as a liability. Okay, next. Okay, audit of retained earning. So a transaction involving the retained earning is net earning for the year and dividend declared, and there may be correction into 3 parts, which is prior period earning, prior period adjustment, and appropriation of retained earning. Next slide. Okay, summary of this chapter discuss that the audit of the capital acquisition and repayment cycle, which includes the primary sources of financing for the most businesses. And the cycle generally involve few transactions, but the individual transactions are often material, which influence the design and performance of tests in the cycle. The approach to auditing this cycle was illustrated for notes payable, related interest expenses, and accrued interest, and for the owner equity and related accounts. Okay. Okay, so that's all from us, our group. And thank you, Madam, for watching our video presentation. And Assalamualaikum.